Good morning, everybody, and welcome to the Offer Accepted Show. My name is Jon Taylor, and I am the host of the Offer Accepted Show, and I'm so glad to be with you this morning. Today, we're going to speak with Missy Buttrum from HomeWire Realty. We're also going to speak with Kris Weninger from Fairway Independent Mortgage. We're going to discuss what's going on in the market and keep you up to date so that you can get your offer accepted, get your dream home, or get that forever home that you've been looking for. This episode is brought to you by HomeWire Realty. Missy and her team over at HomeWire Realty can help you get that home of your dreams, and they have access to an inventory that other agents don't. So if you would like to get that home, get your home listed, speak with Missy over at HomeWire Realty. And with that being said, I'd like to welcome our first guest on the show today, Missy Buttrum from HomeWire Realty. Welcome, Missy.
Hi, Jon.
How are you doing today?
Great. How are you?
I am doing pretty fantastic. So, as always, the market has a lot of energy and it's very dynamic. And to start out, what is the current single-family home supply and demand as of the end of September?
Good question, Jon. Supply is actually coming up. Personally, I'm having a lot more listings. People coming out of the woodwork. They might have been hesitating last year or last spring. And according to Realtor.com, inventory is up about 30% nationwide. It did kind of bottom out in the spring, but things are looking up really for the new buyers that are out there.
Yeah, it looks promising. And, you know, you talked about the inventory being 30% up on Realtor.com. Is that nationwide or is that local?
That's nationwide.
Okay. What are you seeing locally? What's your feeling? What's your insight on our houses? Is there more inventory, more signs out there?
Yes, I do feel inventory is up here. The local MLS shows like a 10% rise over the last 2 months. Not as much as the nation, but we are definitely getting more homes on the market here in the Milwaukee area.
And are you seeing those homes on the market longer? Is it taking longer for them to sell, or is it evening out?
It's a little bit longer. So homes that normally would have been gone in a day are maybe taking a week. But you're definitely in some neighborhoods still seeing that, 2 to 3 day, it's gone. Some things still going over asking in certain areas. A lot of the suburbs or the far suburbs, people are getting out of the city. Those things are still happening, but definitely cooling a tiny bit so that buyers are getting their homes. I'm happy to say most all my buyers have found homes in the last couple months. Their offers have been accepted and they're getting moved into their homes.
Why do you think there's more inventory now? What has changed since April when we were at kind of an all-time low?
With inventory.
Mm-hmm.
Lots of craziness. Many reasons, and home buyers are pushing back a little bit. They're just kind of afraid of the prices getting too high. They're kind of seeing what's happening. Are the interest rates going to go up, down? What are they going to do? Or maybe some of them are feeling like there's going to be more inventory if they just wait. So getting a little bit less demand on that side. Some of it, of course, is our seasonality. Here in Wisconsin, we have, winter, we have fall, spring, all the seasons here. So things go up and down just as a normal year. November especially, it's around the corner. Things will cool off just a little bit during the holidays, and then in January it picks back up.
Right. There is a little bit of the natural flow of things. How have the different moratoriums affected the inventory? Do you feel like there's more of those houses coming on the market yet?
I really do not feel like that's affecting anything yet. There was some extension into September with the moratoriums and letting people stay in their homes. Possibly this winter we'll see more inventory coming up with that effect.
Mm-hmm. Mm-hmm. That's good to know. What is the current sold to list price ratio now?
It's still, according to the local MLS, right around 102%, which means on average in our metropolitan area, things are going about 2% above asking. Mm-hmm. Now, a little bit higher in different areas. It could be more like 5 to 10%. Some might be right below asking to average that out.
Mm-hmm. And that's gone down since the last time we talked about this. I think they were at 103, right?
I think the highest it was at was about 104% back in June, July.
It's notching down. And what is, just to refresh our audience's memory, what is a healthy market?
Well, a healthy market would be more like 100%.
Right. That's even.
That's just evening it out. Now,
Yeah.
once you go under the 100, then you're going into more of a buyer's market.
Yeah. So we're heading in the right direction, and hopefully we'll see that level out and give our home buyers an advantage in this seller's market.
For sure.
In May, the construction prices, the lumber prices were through the roof. It was crazy. And as a result, everything went up and it was doom and gloom. How is the new home build market now? Where are we at with the new home builds?
With the rising costs of existing homes, people are, looking at building. Prices are still up on materials. Time is still slow to get those materials, but way better than May. So we're looking at probably half the price. So back in May, lumber price futures were more at $1,700. Now we're back down to about $600.
And that's normal.
Yeah. Right.
Yeah.
We're more normal like we were last fall. That's about where we're at. But we're still seeing materials being delayed and not getting things in all industries, not just home building, but appliances, furniture. We're still seeing those delays as people, get back to work, and we just need to work.
The supply chain is still stalled. There are 75 ships sitting off of the port of San Diego waiting to come in and no one to unload them. There's no trucks to move them. And so all of that material, all of those little factors affect home prices, especially new home prices, because there's not the nails or the nail guns. They might be on those ships, and if that supply is hindered, those prices go up, and it's starting to level out, and it's going to take a while.
Yes. Yeah. But still a viable option for buyers to look at a new home build, because the prices are getting elevated in the existing homes. It might be a really good option to look at building a home. New home builds are going anywhere from $150 to $300 per square, plus a lot. We're looking at the same with existing homes. Some neighborhoods are $200, $300 per square foot. So it might be an option for someone to look at.
It may be. When we look at homes that are maybe distressed, fixer-uppers, what are you seeing in that market? Are they overpriced, fairly priced? Are you seeing any deals out there?
Not as many deals for someone that's a flipper. We've discussed home flipping on our episodes. But for someone that's going to own or occupy, there's definitely some deals out there. More and more sellers are just leaving their house as is and selling it because they're trying to cash in on this market. And I'm not going to change the carpet. I'm just going to let someone else do it. So it's a really good opportunity for those owner occupants to come in and make some of their own equity.
And I think the best thing that you can do if you're looking for a home, especially on a fixer-upper, is to get a good team on your side so that you have someone like Missy who can give you a good assessment of what the cost per square foot should be so that your house comes out right. And you also have access to interior designers and painters and appraisers and all the people that you need to make that purchase successful.
For sure. My husband and I do have access to other contractors, and we love to share them with our current clients.
And on a future episode, I think we're going to have one of your home stagers on, and I'm looking forward to that because that looks really cool. I saw some of the pictures, and I'm looking forward to that conversation.
Yes.
Thank you so much for joining us again on the Offer Accepted Show, Missy, and we'll see you next week. After a lot of energy happening in the market and a lot of changes and things happening, the market's starting to settle down. So, Kris, what's going on with the market lately?
As far as on the mortgage side of things, there's a lot going on. In this last meeting, the Fed met, and the Fed is kind of liking what's going on. They view the economy as getting out of their slump. Next, they're going to continue to watch it pretty closely. In November, they're going to make a call. And what that means is they're going to see what the economy is going to be doing, and in coming November, they may taper off buying of the bonds. Now, when they purchase bonds, when they taper that back, that means interest rates are going to start to tick up a little bit. So it'll be interesting to see what happens. Now, there's some news coming out of China that we really, really need to watch. There's a big developer that if this developer may be facing a lot of debt, and if they can't repay it, investors might be pulling out of China and therefore purchasing American bonds. Now, in essence, if they purchase the American bonds, guess what? Our rates might go lower. So it remains to be seen as far as what's going to happen.
So what would be indicators of this China deal happening or not happening, defaulting on those loans?
It's a great question. If the loans aren't being paid by this big developer, investors are going to start to pull out. Investors are going to want to put their money somewhere. So in essence, they want to go to safety. Safety is U.S. bonds. So in essence, if they purchase the bonds, that's going to kind of keep the rates low, possibly go lower. It remains to be seen, so we're going to wait and see.
What are some factors that could make the rates go up?
If you take a look at, in essence, the Fed is going to start to maybe possibly tapering the buying of their bonds. So if the Fed starts to taper back a little bit, and if the investors from China don't come back in and purchase these bonds, therefore, in essence, the rates are going to start to, increase, which is fine in that respect. And what's interesting, home prices have risen 41% since 2006. 41%. That's quite a bit. Now, this has prompted another media mongering as far as that there's going to be a housing bubble is going to be imminent. But I kind of beg to differ because, as you know, the media has been talking about this bubble for quite some time. And in essence, for the past several years, we've seen house prices very well supported. Now, we have to compare today's housing market back to 2006. It requires us to kind of take a look at some key differences as far as what's going on. So in breaking this down, the majority of the people that buy homes, they do so on a monthly payment as far as what can I afford in my monthly budget. Therefore, we need to consider the differences in the mortgage interest rates as well as the differences between the housing market in 2006. So now in 2006, the rates ran about 3% higher than where they're at right now. Now this is going to help the monthly payment as far as right now, because with 3% lower, keep your payment lower, obviously. Now, meanwhile, here's another thing to consider. The average hourly earnings have increased 55% since 2006. So therefore, in essence, you have an increased income as it is right now, and for a lesser interest rate where we're at right now. Now, that is according to the the Bureau of Labor Statistics.
And in 2006, a lot of the houses were being purchased as investors or speculation, and now the people seem to be buying more for their own home rather than in that investment area.
Correct. In 2006, that was just the verge as far as when the subprime crash. So in essence, guidelines were a lot looser back then. So in essence, people were buying anything and everything they can kind of get their hands on. Now, in essence, because of the rise in income and as well as the drop in interest rates, the cost to purchase a home today appears to be significantly, obviously, more affordable than it was in 2006. So now, additionally, today's appreciation is due to the record low home inventory as well, because the levels of people that are coming to market purchasing the homes are a lot more than they were back in 2006. In other shows, I talked about the birth rate. If you take a look at the birth rate 33 years ago, remember my famous saying is I always like to say 33 and a half years old is your first time home buyer. So therefore, 33 and a half years ago, there was a big boom in births. So that's why we're having so many more people come to market. If you take a look at 2006, there was not that many people coming to market as far as first-time home buyers in that demographic.
Okay, so there's a lot of factors that go into the housing market, and I think when you hear it on the news, they just use sound bites and taglines to explain it, but it's a lot more detailed and complex than just one factor.
And that's why I love doing the show, because I'm able to break it down, kind of give a different perspective on things, and then bring some goodness to your viewers.
Have you seen or heard any news that would indicate the appreciation? Is that going up or down?
Great question. So the Case-Shiller Price Home Index, it's like the gold standard when it comes to as far as what's going on with home prices. In the month of July, it showed 1.6% increase. Now, year over year, it's a 20% increase, which is at its record high.
Oh, okay. So the houses are appreciating, so it is a good time to buy. Your investment's going to go up. So go out there, get your team assembled, and get your offer accepted. And we'll see you next week, Kris.
Sounds great. Thank you.
Hi
everyone, this is Missy with HomeWire Realty. Today we're over in Glendale with Kris Sherman from Brilliant DPI. How's it going today, Kris?
Good, how are you?
Great, thanks for having me here today.
Yeah.
So tell me, Kris, how long have you been in the business?
Oh gosh, well, the family business since 1987. I came in about 2001, 2002. So we've been around here for a while, but the business is actually over 100 years old.
Oh my goodness, I didn't even know that. I know I saw your dad when I walked in, and
Yep.
it's a family business. What kind of services do you offer here at Brilliant DPI?
We do commercial printing, but the big part of our business is signage, graphic design and branding, which would be wall murals, vehicle graphics, fleet graphics, signs of all types, architectural signs. So
I know you have a lot of big projects. You even wrapped my Cell 911 vehicle, which looks awesome. You even do things like business cards. I know when I was looking for a premium top-of-the-line business card, I mean, call Kris. That's who's going to do a great job.
yeah, thanks.
As far as Glendale goes, what do you really like about being in this area?
I love this area. I grew up here. I went to the school district here, and my business is here. Even though I don't live in Glendale anymore, but my business is. So like, there's ties to the community, and we've been able to develop relationships with the city and the school district, and we do a lot of work with them. So it's been a good area for us.
So tell us some of those projects you've done for the school districts and
Yeah.
the municipality.
Actually, Nicolay High School came to me back, a good 14 years ago now, to help with the signage on campus. And that was a fun project because for years, even when my dad owned it at the time, when I was in the school, we were doing the newsletters and things like that. And then after I left the school and kind of started taking over the business and started doing the signage, one of our early on architectural sign projects was to do a new monument sign for the school. And it was awesome because, like, calling me in as like an alum, getting there, doing the research, building the sign and designing it, it was a fun project. It was a huge project. In fact, we won a national award for that, for the Wisconsin Remodelers Association. That was a pretty cool accolade to receive, knowing that we had worked with them every phase of the way, from the design, the build, the completion, and then the award was a fun project.
I remember that project. So tell me, like, other projects, like maybe what was your favorite one you've done recently?
For the Glendale area?
Or anywhere.
Anywhere.
I've seen lots of cool stuff.
Okay. So one of the coolest things was we recently did all of the signage for ESPN for the NBA Finals. As soon as the Bucks made it in, we got a call from ESPN in LA, and they were like, "Can you do all the signage for the finals for the Milwaukee market?" And I said, "Yep, no problem." Even though I was like, "Oh, I have no idea how we're going to get it done," but it didn't matter. You say yes, and we did. We did all of the. In fact, I got some samples I could show you that we did for ESPN. And another thing too is, again, with history, which is what I love, and the Glendale, Milwaukee areas, we were able to do that historic City Hall sign in Glendale, which was, again, really cool because I feel it an honor when they come to us. It's not the money. It's just the honor to do something. As a kid,
Right.
maybe getting in trouble.
Yeah.
You're running around, but now I can give back and kind of like, penance for my past little trouble maybe, but no, just giving back to the city and the community. So
That's also cool.
Yeah.
I love it. Thank you, Kris, for having me here. This place is so cool. This is Missy from HomeWire Realty. Thank you for joining us.